community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Well, folks, the frustration index hit 161.8% today because you remember yesterday we were trying to sell the gold at 1977. It got to 1975.3 and dropped $100 an ounce in one day. That's $10,000 in 2 days. Hard to believe I missed it. Sat there, not 1382 retracement, just straight down. Nothing but massive selling, folks. Same thing in silver. Silver got up to 24.75. The number we were looking for was 24.88, and it's dropped $2 an ounce. Also a $10,000 move. This is highly suggestive that the gold is going to make at least a 382 off of the low at 1618. And remember, the 1618 low on the weekly chart was a 382 retracement of the whole move that went all the way back, believe it or not, into December of 2016. A major, major move. Now, I want to share something with you. This is the price of gold based on the British pound. I'm going to get this up here. You'll be able to see this. Look at this. The price of gold in British pound almost has made a new high, folks. Now it's reversed, of course, from this level, but it almost took the high out. Now we got to the 78% level, well, within $2 in the April contract, but that's neither here nor there. We missed it. You got to move on, forget about it. But the fact that this was this way in the British pound, in other words, the pound being as weak as it was, and you had to buy gold, you had to spend more for that. That's why you had the price so high. So gold was very expensive for people buying the British pound because the pound was worth less. And so that's one of the reasons why these things are cross-rated like so much of the things that we're looking at. Now, I want to share with you something that you probably will find this pretty interesting, maybe or maybe not. Now, we've had a whole lot of volatility here in the stock market. I wanted to show you this because we posted this in the video last night, and I'll get this up here to show you what was looking at. We like the 382 here. Now, look at last night. You see the 382. We made this. There, the jobs number came out, and, of course, the market collapsed and it broke all the way down here, okay? But look what happened after that, folks. Let me just show you this, and this is why it's so important, because we're heading back down again, and we have been for quite some time. But let's just take a look at this, because what's important about this is the fact that this is how the algorithmic people are making money off of these things. They know these numbers, folks. They really do. I mean, these are numbers that have been around for thousands of years, especially in the last, couple hundred years. And they know the Fibonacci numbers, the numbers of sacred geometry, and they work in the market. Do they work all the time? Almost. They work that way almost all of the time. So look at this. You make the move down. You come right down to this level here, and I'm going to show you what that level was in just a minute. And you go right up to the 78% level, and here you are. You're coming down again. So this is telling you that these numbers are there, and if you're aware of them, this also yesterday, this number right here at 42 and change, 4206, I think, 4208, that was one standard deviation away that we always look at when we watch the Floor Trader's Handbook. So that's why you had a possibility of selling it here, because you knew that this was a very strong resistance number. Well, the number for the whatever the jobs number was the worst number ever, supposedly. And look at this, the market rallies all the way back up. I mean, so that's all algorithmic trading. Now, you want to know why it's algorithmic trading, folks? Because all you have to do, if that were the case, all of the markets would move. The bond market did not move that much, nor did the foreign currency markets. The reason why? They can't manipulate those markets, folks. The bond market is many times bigger than the stock market, and the Forex market is bigger than all of them put together. So they can't push those things around. That's the bottom line of what we're looking at. Let's just show you what this was truly amazing to me, because here is the NASDAQ. Okay, now this is the NASDAQ over the last 8 or 9 days. You're going to be able to see it here. You get up and take a look at it. Well, it's the last 5 days. There was your low the other day. Okay, there we had the big move up. This was after the Fed. Look at the low. Look at the low today, folks. Look at the low today. Right there, it was an exact 382. Here it was before the report. The report comes out. It stops exactly at the 382. Now, there is no way in God's green earth that everybody knows that these numbers work this way. But some people, they look at them. I happen to look at them. Was I buying there? Absolutely not. I recommended the short sale at the 382. And I know that it made at least triple or quadruple what the profit objective was. I didn't even do that trade because I was looking at the euro, and also I was looking at the bonds, and I was trying to find a 382 in the gold, and that was harder to find in a diamond in a coal mine, because you just can't find it. It's just not bouncing, and it's really down big, over $100 an ounce, folks, in 2 days. We haven't seen that in several years, so. That means something, folks. That was a major top up here in gold and in silver, and we need to pay a close attention to that. But I want to walk through some of these other stock indices, because they were doing pretty much the same thing that the others were doing, but each one of them was different. Remember, the big one yesterday was the Russell. So we put the Russell up, and we know that the Russell has made some type of a very big ABCD correction. Very easy to see this one. As you can see, the ABCD right up here. The high was 2012, I think. That measured at 2008 or something like that, and so that should have been a pretty good. Now this has been one of the stronger indices. Okay, now if that's the case, and these numbers are going to mean anything, this should bear out on the smaller time frame. So what we're going to do is go to the smaller time frame, doing the same thing like we did in the NASDAQ, and we'll get this up here. You'll be able to see. I'm going to be covering some of these things when we do the live trading thing on the 23rd of this month. We're going to go over these, so that you'll be prepared for them. Look at your low today, exactly to the low right there. And it all goes up and almost makes a new high. Doesn't quite do it. And of course, now it's coming off. So we made 382s in the NASDAQ. We made 382s in the Russell. The Dow Jones made a 50%. And the E-mini made a 50%, but they're all following off of these numbers. Now remember, the NASDAQ is the second largest after the S&P 500. It's the S&P 500 first, the Russell second, the NASDAQ third, and fourth is the Dow Jones. That's based on open interest, which is the volume and the number of traders that are in there, and that's why these things are so big and they react the way they do. So that's the real key behind that. Also, if you remember, we were here just the other day, and we were talking to the folks here. We'll give me a break here, and I'll be right back. 877-927-6648.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I've had 3 or 4 questions about natural gas. I'll cover that, but I first wanted to cover Meta, which is the old Facebook. I posted the chart up here, and you notice that we were waiting to see if it was going to make a 382 retracement. Now, this stock is in the news with huge volumes. Folks, it's doubled in price here since November. You can see the multiple ABCD patterns that completed down there at around $90. Of course, a big move, gap down, and of course it filled the first gap at 120, and then on its way up to the second one. But look at where we are right now, folks. If you believe in these numbers, and we certainly do, look at the high yesterday that we had in Meta. You're going to see that the 382 retracement on this came in at 199, and the high on this, folks, was 198.16. It missed it by less than $1. It's $200 stock, missing it by less than $1. Now, maybe it'll go through there. Maybe this doesn't mean anything. But the fact that it hit that exact number is very important, because we've watched this over and over again, how these things react to those numbers. And it's very, very important. Now, let's get to natural gas. I have more not complaints, but understanding of what's going on here. And remember, folks, I really like natural gas at 286. I really liked it with a stop at 276. It had everything going for it, setting right at the A, B, C, D, just setting there perfectly. Look at this. And here's where the cycles get you into trouble. They don't work all the time. And if you don't put a stop in there, you're going to get your head handed to you. And that's the one thing I'm not going to let that happen. I respect you too much. B, I respect the O'Briens too much. And C, I don't like to give money away. So that's the main thing. Now, just to give you a little heads up, okay, I saw just a little while ago, and I did this a while ago when it was trading at 237. I want to get this up here. We got it now. Natural gas is down here now at 237. And someone says, where is the bottom? And I had to be really honest, folks, brutally honest. And I said, I have no idea. And you know what? I don't care. And I'll tell you why. Back in 1982, when I went to the floor of the Chicago Mercantile Exchange, Barry Lind, I cleared all of our meat trades at Drexel, was cleared through Lind Waldock, and I knew Jack Waldock, and I knew Barry Lind. And Barry said to me, how can I make your stay here in Chicago fun and profitable? I said, Barry, if I have a loss at the beginning of the third day in something, just take me out of it, because I know I'm wrong. And he said, I can do that. He said, do you want us to come to tell you to do it yourself, or do you want the runner to do it? And I said, just have the runner take it into the pit and take me out, and I'll look at it the next day. And that was good. It happened maybe 4 or 5 times, maybe 6, maybe 12. I don't remember. It wasn't very many. It was certainly not 12 over the next 3 years. And every single time, all I had to do was just to reverse that position. Just look at reversing the position here. If you'd have got stopped out at 276, you'd have made 40 handles. Okay, folks, that's $2,000. And that's a substantial amount, but I didn't do that. And if you look at it closely, most of those rallies that we had were right at 382 retracements. This one right here was at a 382 retracement. This one is at the 50% retracement. So you don't know what it is. And I don't know where the bottom is, and I've quit looking. So what I will do is I will wait for the bottom to be formed, and then it rally up a little bit. And then if it pulls back and shows me a Gartley, a 135, something that tells me that I don't have to risk very much on that trade, I'm going to take it. And that's the main thing of what I like to do. Now, let me show you another trade. There's 2 trades here that I really want to get to show you what's going on here, because it's quite important, because we learn from our mistakes. And we've had one heck of a week, folks. We sold the euros, that's had a huge move to the downside. Nothing like gold. We missed gold by a heartbeat. Nothing we can do about that. Look at this. This is soybean meal. Now, look at this beautiful 3-drive to a top pattern. Now, we sold it here. Unfortunately, it went against us, and we got stopped out. We lost $500 on it, and it's closing near the high of the day, so we'll look at it again on Monday. But that was one that just didn't quite work. Okay. Now, thankfully, because the folks at TFNN have worked it out that I can send these videos out to show you that things, when they happen, they can be very, very informative if we can get them out there in a hurry, so that you're not going to get in front of a freight train to see if you're going to be getting in the wrong trade. And one of those trades today was right here. This was the beauty of this, be able to get these videos out, because I saw this happening. And I said, we don't want anything to do with that. Look at this. We were waiting for this 3-drive to a bottom to form. Drive 1, drive 2, and drive 3 right about here, okay? That was the wrong thing to do. The reason why is, look at this. We make a 382 retracement of last week's high to the tick. I mean, within 10 points, and we dropped $2,000. Now, I sent it out when it was right about here. Now, I posted this in to show you that we would have been buying down in here. We would have certainly been stopped out, because the market went substantially lower than that. So this was a factor that happened so quickly. When the market collapses this much, it's telling you big time. Just like what happened here. When it cracks too much, boom, 382 back. Cracks this much, 382 back. Those are things that tells you the dynamics of the market, and they're very, very helpful. And fortunately, I can't get them all out that way, but that was one that saved us a whole bunch of money. I never thought it was going to make that 382, because I thought it would make this before. It fooled me, but you can see from the high down to the low exactly 382, just like what Meta did. And that's one of the things that we're trying to get across to you when we're watching some of these things unfold. Okay, someone has a question about the euro trade. I'll get this up here. This is the trade that we did yesterday. It had everything going for it. I mean, if you like ABCDs, there it was. You had a beautiful ABCD pattern measuring right up to here. If you'll remember, we went down to a 4-hour chart to show you the area at that 110.20 was where you wanted to be short, and the high would have been 110.60. And of course, it's broken down quite a bit today. It's made a considerable amount, just about $1,700 and we're going to see, we're out of it right now because we didn't want to take the trade over the weekend. And so that's what we're doing as we look at these things coming into them right now. Hold on one second here. I want to show you one other thing here. I know you're not going to go anywhere, so just bear with me. One other thing. I wanted to talk to you. I showed you the NASDAQ 382. I showed you the Russell 382. And I wanted to show you the I didn't do the S&P because it went to the 50% level. But the main thing that I wanted, today's close is so very important, and let me tell you why. And this is my opinion, okay? My opinion on cycles and stuff. And guess what? You're not going to get this opinion until we pay a few bills, and that's going to be in just a little bit. I only have 45 seconds, and that's not enough time to give you the information that I want to give you about cycles. And it's a little tiny bit of astrology, but very little. And I'll cover that when we come back from the break. It'll only take a very, very short period of time, and then we'll be okay. 877-927-6648.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, we have, I believe, Stan, Mr. Volatility Harley, on the line now. Stan, how are you doing?
Larry, good afternoon from cool New Jersey.
Hey, listen, thank you for calling me last night to tell me that I should go short into this report that is going to be an all-time blockbuster, and that was very, very helpful. Was I dreaming or not? Stan, how do you explain something like this to people?
Well, we've got some charts we're going to get into here in just a moment that'll provide that explanation, but I think a great buying opportunity is being set up for us here. Just going to have to be patient for about 2 to 3 days.
Okay. Sounds fair enough to me. Please show us what you're looking at, buddy, because you've been pretty much...
Let me bring up my charts.
Okay.
And
got your... The first one was the Bureau of Labor Statistics one that, to me, looked like an unbelievable number. I mean, I just to see it's an outlier event by everybody's imagination, I would think.
Indeed. The unemployment report came out today, and what I thought I would do is just highlight a few things on this.
Okay.
If I can get to it. Well, I think I may have.
I can put the charts.
I've got some problems here, so let's go to
I can put the charts in. Just tell me when to switch, and I can do it.
The first chart here is the unemployment data. As soon as it comes up on the screen.
Wow. Wow. Okay, we're ready to go.
Larry, I think I sent the wrong charts. Oh my gosh. Well,
we can. These are. I don't know. They fit pretty good because that's what unemployment happened today.
Yep. Well, okay. We're going to talk our way through it here. Unfortunately, I sent you moments ago the wrong charts. I'm sad to say.
Well, I made a mistake like that once about 15 years ago, so I'm waiting for my second one to come up.
Yeah, and in the short hairs here, I moved them between computers, but maybe we'll have it said after the break, that's for sure.
Okay.
But let me just talk through the first one, and then when we take a break, we'll have the right chart set up. I'll get that fixed here. But anyway, the unemployment data came out today. We are at 3.4%, highest we've been since 1969. And what I have found is unemployment tends to reach its best level before the ultimate stock market cycle high. For example, back in 22 years ago, back in the year 2000, unemployment reached its best level in April of 2000, and the stock market, the cycle top, occurred in September of that year when the New York Composite peaked out. Fast forward another 7 years. The unemployment data reached its best level in March of 2007. The stock market peaked in October of that year, 6 months later. February of 2020, unemployment reached its best level at that time, and the stock market also peaked in February. So fast forward to the present time, unemployment has now reached a new recovery low value. What does the past tell us? It tells us that the stock market peaks out either coincident with or maybe 6 months after unemployment reaches its best level. So that tells me we have not seen the final cyclical peak in the stock market yet. Doesn't mean the Dow hasn't peaked. It doesn't mean the NASDAQ hasn't peaked. It doesn't mean some of the indexes haven't already peaked out. But the orthodox cycle top has yet to occur. And I think that that's probably coming in a couple of months. And I've got some additional charts we'll show after the break that'll highlight that. But that's what the unemployment data can tell us. Some pretty powerful information there.
Okay, we have a question from one of our listeners in Tucson, Arizona. He has his hand raised up right now. It's me. Stan, I know you're working for an investment group back there. Do you have group meetings every morning to discuss the situations in the market as you see and certain selling or buying opportunities? Is that really what your job is?
Well, I have multi-roles here. Yes, I am with a firm here in New Jersey, and yes, we do have an investment committee, a team of analysts and traders, and we all put our heads together. My role is the chief market strategist.
Okay.
But I also, as you know, have been a publisher of the Harley Market Letter since the mid-1990s. And I do all of my own research, all of my own analysis. I've been involved with the technical analysis community and the Foundation for the Study of Cycles for 40 years, I think. Certainly, I kind of cut my teeth in this business when I lived in Southern California with you back in the day. And also, I was president of the Market Analysts of Southern California for many years. Fortunately for me, and I mean, wow, really fortunate for me, as the president, I got to bring in all the top talent around the country, bring them in as a guest speaker, and then because I was good friends with the folks on Channel 22 television there, KWHY in LA, also arranged for them to be guest speakers on the air as well. So it was kind of a win-win for me. That kind of molded me. You spoke to my group a couple of times back in the day, you may recall.
Oh, yeah, I certainly remember.
And having met all of these wonderful people, really smart people, molded me into what I am today as far as a technician and a cycles analyst.
What people don't realize is that the show in Los Angeles was run by Merrill Lynch for a while, and then they gave up on it. And Sue Herrera and Bill Griffith, Sue went to New York to pitch CNBC to NBC. And they bought it right away. They brought in Ron Insana, came back out, and Bill Griffith. And by golly, son of a gun, it turned out to be CNBC, and she deserves. People don't give her the accolades that she deserves, but she was the one that put it all together. And I remember, I don't want to go into the personal part of that stuff, but
and don't forget Richard Saxton, who was just
Richard, he's still a good friend of yours. He sure is.
Anchor. And one thing about Richard, he had a very high grasp of technical analysis.
Yes, he did.
Unfortunately, a lot of other desk anchors I don't think have. They're more schooled in the fundamental side of things.
Yeah.
But
the problem was he was too good looking. That's why he was an actor. He wasn't cursed like you and me. And do you remember Ed Hart? What a home run guy that was. Oh my God, he was.
Yes.
He was just so incredible. Boy, just so many of them, and it was just really great during those times. And Gene Morgan, remember charting the market?
Gene Morgan. Gene Morgan.
Oh my gosh.
And Sher McClellan. Who I had lunch with during the holidays when I was.
Yeah, Peter Leides would be on the show all the time. Yeah.
After I was with you.
Yeah.
We've got some really good charts that I want to share with the viewers. We'll do that after the break.
That sounds great. We're gonna take a little break. I believe it's going to be pretty soon. We got another 50 seconds. So anything else? Just keep saying what you want to say.
What I'm going to show are some charts highlighting the New York Composite Index, which is an index I think doesn't get the attention it deserves. Most people focus on the S&P 500, the Dow, the NASDAQ. I focus on what I call the Big Five. For me, the Big Five are the Dow Industrials, the Dow Transports, the S&P 500, the NASDAQ Composite, and the New York Composite, which is the broadest measure of activity on the New York Stock Exchange.
Okay, we're going to take a break. We're going to take a break, and we'll be right back with Stan Harley and the Harley Stock Market Letter. We'll be right back, folks.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, and we're talking with Stan Harley of the Harley Stock Market Letter. Stan, would you continue, please?
Absolutely. I've got my charts now, so let's go to it. I'll take command here with the sharing.
Okay.
And here is the unemployment data that I was talking about just a little while ago. And as one can see, the unemployment, best levels in unemployment tend to precede peaks in the stock market.
Okay.
And given that we're seeing our best levels right now, that would tell me that the stock market peak is yet to occur.
Alrighty.
We'll go to the next slide. This is the New York Composite Index, Larry. What I've done here is I've gone back about 5-6 years and noted the major peaks in the New York Composite. We had one in January of 2018. The next peak occurred in early 2020. Next one in early 2022. And those are separated by just about the same time frame. I've got 1.0, 1.0. And if we project forward in time, 0.382 of the distance between those two highs, that lines up exactly with the October low of last year. And then if we go forward 0.618, Fibonacci relationship, it takes us to some point in the future. And I've drawn the line where it is. It looks like it's early April. On the next slide here, what I've done is I've put the dates into a spreadsheet, and I've done a mathematical analysis. This procedure is called a regression analysis. Basically, it's a technique that mathematicians employ to find the best mathematical fit to the data series. And what it tells me is we should be looking to the time period right around April 7th, the week of April 7th, plus or minus, about just under 3 weeks. The standard deviation on that calculation is 2.77 weeks. So to kind of button it up and put a little ribbon around it, that tells me that the potential is there for this market to keep grinding higher into about April 7th, that week, plus or minus.
Wow. That's really interesting. You've been nailing this thing pretty good. And I have to give you a lot of credit because, you've been bearish for quite a while. And then near the bottom there, in December, you began to turn positive, and that was the right thing to do. So that's not easy to do that.
Well, this is and technical analysis is a process. We have to
amen to that. That's for sure.
Try to stay ahead of the game and revise our views as they go along. These are my views today. They might change tomorrow, next week, next month, but these are the tea leaves as I see them now.
Let me ask you a quick question. Sure. What would happen? Would take just a monster down day, like 3 or 4 or 5% of the market for you? Well, that would be huge. But say 3% down, something like that. Would that change your view?
Well, I look at monthly, weekly, daily indicators. So the indicators across all those time frames, Larry, would have to roll over, and I don't see that right now. Okay. They're all heading higher.
Yeah.
And so, it would take considerable movement and dots on the page to change the views. Now, let's bring the snapshot even closer to the daily chart. This is the Dow that I ran off just moments before TFNN called me on the phone. But this is a chart, an update from what we've talked about on the air before. The cycle that's averaging about 80 trading days, 79.6, and there's some Fibonacci math that goes into it, is just done a dandy of a job of defining all the highs and the lows. I've drawn the highs there with the blue lines. The next high, by the way, in this series, assuming it continues, which it may not, but assuming it does, is due that first week in April, which happens to be the same time frame that the weekly analysis I just showed you with the New York Composite was suggesting a high might occur. So the daily and the weekly are lining up for that early April time period for what could be a very important high. Now look at the lows. I show those with red vertical lines. The cycle expanded a little bit over to the left, but since then it's been coming in fairly regular at right around 80 trading days. And the analysis would suggest the next low in this cycle is due right around February the 8th, plus or minus. Well, that's next week. I think the President of the United States is going to give a State of the Union address on the night of the 7th. So my sense today on Friday, and that's only a few days away, perhaps whatever he says to the nation is viewed as market friendly. We come in here the morning of the 8th, the futures are higher, and we rock and roll on the upside. That's just the best guesstimate at this point in time. But that cycle, assuming the pattern continues and it doesn't expand or contract, it's due the early part of next week. So I'll be watching that very carefully.
Well, this is really good stuff, Stan. Tell the folks how they can reach you, Stan, if they'd like to see a copy of your letter, maybe even subscribe.
I have a website, Larry, harleymarketletter.com.
Well, listen, we're going to have you on again soon.
On the website.
We're going to have you on again soon, and thank you for sharing us the information today, because I know you're really busy, and it's always great to talk to you. And please be safe over there. Be patient, Stan. Your 3 days of summer are coming pretty soon, July 4th and 5th. So just be patient. The weather will warm up.
Okay,
Stan, you know it hit 21 here 2 days last week in Tucson, 21 degrees. I mean, that's not Celsius,
wow.
That's Fahrenheit. And
wow.
It was cold.
Wow.
But it's warming up today. It's going to be 68 today, which isn't too bad. So, hey, listen, thanks for joining us, buddy. I'll let you get back to work, but hope to see you again soon. It was great, sharing some bread with you in December, so hope we'll do it again.
Terrific.
Okay. You bet. Stan Harley, folks, the Harley Stock Market Letter. We got the markets are getting hammered again on the way back down. It looks like we're heading down. We're down 41 in the S&P, and we're down almost 200 in the Dow Jones, and down 185 in the NASDAQ. So it's going up and down. I mean, we've had tremendous volatility today that we've already pointed out. And I imagine this is probably going to be continuing, for quite some time. Also, the second question someone asked me about the natural gas. I think let's say it's the fourth one. What is going to happen to natural gas? I don't care. The reason why is it's gone way below where I thought. I can't keep following. I watch it, but what am I going to do? Keep trying to pick a bottom? Everything that I had said that it had to be a bottom, and it didn't. So what are you going to do? It's just you just got to be able to say this is one of those things. And I just shake it off. I really do. I mean, I shake a lot of them off. Look at the gold trade that I missed today, folks. I mean, hello, operator. Yesterday, I had the order setting in there, and it misses it by $170, and then drops 10 grand. People ask me that question all the time. I don't know. It's just like the question in the answer for the natural gas. All I'm doing is I'm trying to find a place where I don't have to risk very much. And I'm good at that. I spent a lot of time trying to learn that. Let's be right back. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, we talk a lot about ABCD patterns and the other stuff, and we do have guests on to talk about the astrology. Yesterday, we had Shane Smolian, the wolftrader.com, on, and he warned us about February the 3rd because there was a sun squared Uranus. He even posted the chart that I've just posted into the den saying be really careful here because this was a major aspect. And here we are, all of those ABCDs and the Russell and some of these others that were hitting right on that time. And look what happened from that level, folks. It's just been a big move down and expected to be down for 3 or 4 more days. So we're going to find out over the weekend whether he's right or not, but for one day, he's been pretty much spot on. And one day is good enough if you can control your risk. And that's the main thing that we try to do here, is to control the risk. Regarding the natural gas, folks, when it's time for natural gas, I'm going to be ready, okay? And when it's time for some of these other things, I'm going to be ready. But the main thing I focus on is when I'm wrong, I want to get out of there and wait for the next bus to come by. My grandma told me when I first started dating when I was 16, something like that. Anyway, she said, always have 2 quarters with you. What was a dime? She said, always have 2 dimes with you, because if you don't find the girl on the first bus, use your second dime and you'll find the girl on the second bus. So that was back in the old days, and who knows what's going to happen from there. Anyway, folks, we're going to have some great guests next week. Mike Moore of More Analytics will be talking to us about the crude oil and stuff like that, and we'll be updating everything over the weekend with the newsletter and all the videos that are coming out. I know I'm sending more videos out every day, usually 3 a day, because these markets are active, and if we can take advantage like we could this week, I want to try to do that. So it's easy for me to do. They're getting to you on time, I believe. Once in a while, they might be off by a few minutes, maybe as much as 10 minutes, but by gosh, they're pretty close, and these patterns are pretty accurate. So let's pay attention to that. Live every day in an attitude of gratitude, and may God bless.